State Bank of Pakistan has decided to keep its policy rate unchanged at 11.5% in the final monetary policy review of the fiscal year 2026. According to Monetary Policy Committee, the decision reflects a broadly unchanged macroeconomic outlook since the previous meeting. The committee noted that the global oil prices have eased following recent geopolitical developments, but they are still higher than pre-conflict levels. It added that the effects of earlier geopolitical tensions are now becoming visible in economic indicators. The MPC highlighted that inflation has picked up again, with headline inflation rising to double digits in April and May, while core inflation has also edged higher. It said this trend reflects the continued impact of elevated prices and broader economic pressures. On economic activity, the committee observed signs of moderation. It attributed this slowdown to higher prices, austerity measures, and ongoing uncertainty in the economic environment. Despite this, it noted that external account pressures remain moderate. The committee further stated in its assessment, the current monetary policy stance remains appropriate to steer inflation towards the medium-term target range of 5 to 7%. The statement also outlined several key economic developments since the last policy meeting. It noted that Pakistan's GDP is provisionally estimated at 3.7% by the Pakistan's Bureau of Statistics. It also pointed out to the marginal recovery in both consumer and business confidence, as reflected in recent sentiment surveys. Alongside this, inflation expectations have eased slightly, indicating some establishment in outlook among economic agents. Another key development highlighted was progress on the external front. The MPC said the successful completion of IMF reviews under the Extended Fund Facility and Resilience and Sustainability Facility, along with ongoing inflows, helped increase the State Bank of Pakistan's foreign exchange reserves to $17.2 billion as of June 5, 2026. The committee also noted fiscal consolidation efforts, stating that the primary balance surplus was estimated at 2.5% of GDP, with a target of 2% of the GDP set for financial year 27. The statement further placed the domestic situation in a global context, noting that the Middle East conflict has affected macroeconomic conditions in several economies, leading some central banks internationally to raise their policy rates. In Pakistan's case, the only policy rate increase in financial year 26 came in the previous review on April 27, when the State Bank raised the benchmark rate by 100 basis points to 11.5%. The increase has been linked to geopolitical tensions in the Gulf region, which pushed up oil prices and disrupted global supply chains. However, the MPC noted that the global oil prices have since stabilized or eased, and market participants believe this has reduced the justification for further rate increases. Analysts also pointed out that the concerns over a prolonged conflict in the Middle East have eased, and supply chain conditions have improved over the past month.